Your credit score affects your ability to get approved for loans and credit cards, and can even impact your job prospects and housing options. But don't worry, boosting your credit score doesn't have to be complicated or overwhelming. In this video, we'll explore some simple steps you can take to improve your credit score and achieve your financial goals. So let's dive in. Number 1, understand your credit score. Your credit score is a numerical representation of your creditworthiness. Before you can improve it, you must first understand it. One way to do that is to obtain a copy of your credit report and review it carefully. Your credit score is influenced by factors such as your payment history, outstanding debts, and length of credit history. Understanding how these factors affect your score can help you make informed decisions to improve it. To start, you should also know that there are 3 main credit bureaus that compile credit reports: Experian, Equifax, and TransUnion. Each bureau may have different information, so it's important to check all 3 reports. You are entitled to a free credit report from each bureau once a year, which you can obtain by visiting annualcreditreport.com. Once you have your credit reports, review them for accuracy. If you find any errors, you can dispute them with the credit bureau to have them corrected. Remember that your credit score is constantly changing, so it's important to regularly monitor your credit reports to ensure they are accurate. Number 2, check your credit report. Reviewing your credit report can help you understand what factors are impacting your credit score. It's important to check your report regularly and ensure that all information is accurate. Identify any errors, such as late payments or accounts that don't belong to you, and dispute them with the credit bureaus. One way to check your credit report is to request a free copy from each of the 3 major credit bureaus: Experian, Equifax, and TransUnion, once a year. You can also use a credit monitoring service to keep an eye on any changes to your report. Remember, your credit report is a snapshot of your credit history, so it's crucial to make sure it's up to date and reflects your current financial situation. Number 3, pay bills on time. Paying bills on time is one of the most critical factors in maintaining a good credit score. It may seem like a no-brainer, but it's something many people struggle with. Late payments can negatively impact your credit score and remain on your credit report for up to 7 years. To avoid this, consider the following tips. Start by setting up reminders for when your bills are due. This can be done manually or by using an online calendar or an app. Always aim to pay your bills a few days before the due date to allow time for processing. Consider setting up automatic payments for your bills. This can be done through your bank, credit card issuer, or the company you owe money to. Automatic payments can give you peace of mind knowing that your bills are always paid on time. If you're having trouble making payments, contact your creditors to discuss payment arrangements. Many companies are willing to work with you if you're experiencing financial hardship. Ignoring bills and not communicating with your creditors can make the situation worse and cause long-term damage to your credit score. In addition to paying bills on time, it's also essential to pay the full amount due. If you're unable to pay the full amount, pay as much as you can. This will reduce the amount of interest charged and help you avoid late fees. Number 4, pay down debt. Paying down debt is an essential step in improving your credit score and regaining financial stability. It can be daunting, but with the right strategies, you can chip away at your debt and see your credit score soar. Here are some creative ways to tackle your debt and improve your credit score. Prioritize high-interest debt. If you have multiple debts, start by paying off the ones with the highest interest rates. This will help you save money on interest charges and make it easier to pay off the remaining debts. Consider debt consolidation. If you have multiple credit card debts with high interest rates, consider consolidating them into one loan with a lower interest rate. This can help you save money and make it easier to manage your debt. Negotiate with creditors. If you're struggling to make your payments, don't be afraid to reach out to your creditors and ask for a lower interest rate or a payment plan that fits your budget. Use the snowball method. This method involves paying off your smallest debts first and then moving on to your larger debts. By starting with small wins, you can build momentum and stay motivated to tackle your larger debts. Cut expenses. Take a close look at your budget and see where you can cut back on expenses. Consider canceling subscriptions, eating out less, and finding ways to save on groceries and utilities. Number 5, keep credit utilization low. Maintaining a healthy credit utilization ratio is crucial to boosting your credit score. This means you need to keep your credit card balances low relative to your credit limit. It's recommended to keep your credit utilization below 30 to have a positive impact on your score. One way to keep your credit utilization low is to pay off your balances in full each month. Another way is to request a credit limit increase, which can increase your available credit and lower your utilization ratio. However, be cautious not to overspend just because you have a higher credit limit. You can also consider opening a new credit card account to increase your available credit, but be careful not to open too many accounts at once, as it can negatively impact your credit score. Furthermore, try to avoid closing old credit accounts, especially those with a long history, as they can contribute positively to your credit history and credit utilization ratio. Number 6, don't apply for too much credit at once. Maintaining a healthy credit score is crucial for securing loans, mortgages, and credit cards. Applying for too much credit at once can damage your credit score. It's important to manage your credit score. It's important to manage your applications wisely to avoid negatively impacting your credit. Here are some tips to keep in mind. Be selective. Only apply for credit you need, and be strategic about when you apply. Too many applications in a short period of time can be a red flag to lenders. Plan ahead. If you know you will need credit in the near future, plan accordingly. Spread out your applications over time to avoid a sudden surge of inquiries on your credit report. Monitor your credit report. Regularly checking your credit report can help you catch errors or fraudulent activity. This can prevent unexpected surprises that can negatively impact your credit. Understand the impact. Each credit application results in a hard inquiry on your credit report, which can lower your credit score. Be mindful of this impact and try to limit your applications to avoid unnecessary damage. Seek advice. If you're unsure of how to proceed with credit applications, seek advice from a financial advisor or credit counselor. They can offer guidance and help you make informed decisions. Number 7, be patient. Transforming your credit score doesn't happen overnight. It's an arduous journey that requires patience and consistency. With the right mindset and strategies, you can gradually improve your score over time. Here's how. Don't give up. Building a good credit score takes time and effort. Don't let small setbacks discourage you. Keep working towards your goals, and you will see progress. Monitor your score. Keep a close eye on your credit score. Regularly check your score and report to stay on top of any changes. Maintain good habits. Stay committed to good credit habits, such as paying your bills on time, keeping your credit utilization low, and paying down debt. Be cautious. Think twice before applying for new credit. Every time you apply, it creates a hard inquiry on your credit report, which can negatively impact your score. Seek professional help. If you're struggling to improve your score, consider consulting a credit counselor or financial advisor for guidance. By following these tips and being patient, you can gradually increase your credit score and reach your financial goals. Don't give up, keep pushing forward, and you will see progress in due time. Remember, a good credit score can open up opportunities for you, such as lower interest rates on loans and credit cards, higher credit limits, and even better job opportunities. If you found this information helpful, please consider subscribing to our channel for more financial tips and tricks.